What's going on, guys? A big choppy range today. So to kind of start the day, we did take out the London session high and then we kind of quickly retraced. So there was a couple of setups to kind of start the day. One thing that I'm going to start advocating a lot more is looking for those first initial one or two setups and then calling it a day. Now, there's always areas of opportunity for you to kind of make money all throughout the day. But one thing that I see more so than not, and this comes from not just me, myself, but a lot of traders that are inside of Evolution Traders who are funded and who are taking payouts. It seems like the more consistent traders who are actually getting paid from this whole thing are taking less trades, right? So you're really not looking to sit there and take 10, 15, 20 trades a day. You're trying to find your spot, you're identifying your setups, you're waiting for price action to hit your level. Whatever it is that you're trading, you're taking that one trade. If you get one more and you win, you're done. Okay. So if you're finding it difficult right now to actually start passing these evals in a timely manner, you just keep blowing them up, you're probably over trading. If you get to the funded account and you're making some money and then you blow it up, you're probably trading too much size and you're trading too much. Let's look at a couple of my strategies. We're looking at the 5-minute time frame. We're looking at the 20 SMA. We're looking at that overnight high, right? It gets breached. And then what you're looking at is a little bit of a blow off top, right? So once you get that blow off top, assuming that we don't pull back into that level of support and put in a new high, we can kind of almost treat this as we're looking for the shorts only until we see something happen. Okay. So what does that mean? Well, the first trade setup of the day was here. It was the long. It was the 20 SMA long position. Now off the open, assuming that this is not your first day trading, you guys understand that off the open, the ranges are big. Okay. So if you're running tight stop losses, they're probably going to get triggered. Does it mean that you were on the wrong side of the trade? No. Does it mean that your strategy is not working? No. What it means is you're actually trying to protect yourself more so than what the chart actually needs room to do. Okay. So there's a couple of ways that you can kind of combat that. You can size down, open up the stop loss a little bit earlier in the day, or you can cut down your price target small. Okay, so you can take heavy size and get filled, get in and get out. So the 20 SMA, the high price was 20,826. Next candle opens up, kind of pulls back a little bit, shoots in a little bit of a high towards 837. There was 10 points of room here. Now, when you look at that, if you're getting 10 points of room, okay, and I'm not even talking about pushing up higher here and pushing up higher here. All I'm talking about is getting in right there and trying to catch a little bit of that wick for a scalp, right? Because what's the setup? The setup is here. So if it confirms, get in, make money, get the hell out. So if you're trading one or two mini contracts, you take 5 points, that's $100 a contract. That's a $200 trade very, very quickly. Now, maybe on a Friday, you tell yourself, I'm going to just wrap this up. I don't need to necessarily trade anymore. Once we kind of put in this blow off top and we pull back the first time and we try this attempt at a bounce, you put in a lower high. Now you can be thinking short until high of day is broken. Okay. So you get another 20 SMA trade here. This one, if you look at it, entry price on it was 782. At one point in time, it did bounce up to 794. So you're looking at between 782 and 794, about 12, 14 points worth of pullback. Again, if you had a stop loss, 10 points, 5 points, you're going to get triggered in getting out of that. And why is that? Well, at this current time, ATR is sitting anywhere between 30 and 35 points on the NAS. So if you're trying to have that really tight stop loss, I'm not saying that it's impossible to do. What I'm saying is you can be getting into the correct move, but you're either trading too big a size with too tight a stop. So you got to size down and open up the stop, especially after the first hour. This first hour, we need to be running a wider stop, or the first hour, we need to be trading less size because the volatility is strong, right? You obviously know if the trade works out, you're going to get 5-10 points very quickly on the NASDAQ. So why not take the approach where you're going to trade one or two contracts, you're going to make a quick $100, $200, and see if you can find two trades within the first hour. Because if you can find those two trades in the first hour, you're essentially talking about $200 to $400 off the open. Now, the next trade that did work out was a 30-minute opening range low. So if you look at the low, right, look at the low from the 30-minute candle, it was here. Okay, so off the open, that low was our low of day, and you can see here at 10:10 New York time, we break that. So when we break the price of 20,826, or excuse me, 20,775 is the low. As soon as we break that here at 10:10, we shoot down to a price of 20,750. So even that was a 25-point move very quickly before it chops back up on you 20 points. So if you're looking for like, okay, here's a 30-minute opening range, we just lost that, let me go ahead and try to just hold this because it's going all, I don't know where, all the way down into the dirt, you're going to get stopped out because it's going to bounce on you 20 or 30 points, right? So take your money, take your 5 points, take your 10 points, take your 15 points, take your 20 points, and wrap it up, guys. We should have been done trading realistically. And I made this joke, just jokingly on the call today in Evolution Traders. The longer you sit in the market and you're trying to trade all day back and forth, you're just opening up the doors to give more money back, right? So again, assuming that you're still trading later in the day, maybe you're trading in an account that you never took any profits on or never took any trades on. I could see that. If you, let's say, made $500 and now you're trading 2 micro contracts, where the worst that's going to happen to you is you lose, 40, 50, 60 bucks. I can see that. But if you're still trading the same amount of size, you made $100 here, you made a couple $100 here, you made a couple $100 here, and now, you're sitting up on the day $300, $500, and you're still taking those same trades with the same amount of size, God forbid you get stopped out and give it all back in one trade on a Friday, right? At the end of the day. So what do we really need to talk about? What do we really need to do? We need to size down off the open. That is what it is. We need to look for smaller price targets. So a lot of people think that because of the morning, because of the influx in volatility, that you can make all this cash. And you can make, 20, 30 points very quickly. But a lot of times traders, they don't know when to get out. They don't have that intuition yet. They don't have that experience yet. So they can watch a position go from green to red very quickly. And then it's like a deer in headlights. You stop, you freeze, you have no idea what the hell to do anymore. And then you watch that position just bleed down 1,000, down 1,500, 1,400, 1,300, 1,800, 2,000. Count is blown, right? So tighten up the take profit, right? Tighten up the take profit. If you insist and absolutely insist on trading big size, tighten down your take profit. Treat yourself more as a micro scalper, as a hyper scalper, right? I shouldn't say micro, as a hyper scalper, where you're going to get in, you're going to take 2, 3, 4, 5 points quick, right? And yes, I get it. Some of you guys are going to say, well, that's nothing on the NASDAQ. I can catch 50 points. Okay, great. But how many days can you catch 50 points without, one day you get into some deep, dark drawdown? How many days are you going to catch the 30-point move and then take the next trade and now you're down 40 points, right? So again, there's a pro and con to everything. I've just seen more experience on traders who are a lot more consistent, including myself, when I take less trades, right? So if I really find myself up in that upper echelon, like over 8 trades, 7 trades, 10 trades a day, I find it very difficult to finish the day with a higher balance than I really had earlier in the day. It's kind of just like, okay, win a trade, chop a trade, win a trade, chop a trade. Now, I do see traders who do scalp a lot, 20 trades a day, 30 trades a day, but their price targets that they're looking for are super tight. They might be looking for 2 or 3 points. And like they're getting in on a quick move on momentum. They're taking the 3 points. They're getting back out. They have a super tight stop loss where it's like a 1-to-1. It's a flat trade, essentially, down $100 or $200, but you're looking to make that quick $100. For me, that's very stressful. It's very, very stressful to do that. And it's very stressful to do that on a day in and day out basis. I'm not going to lie, guys. You get burnt out. Like I get burnt out. By the time Thursday rolls around, I'm so ready for the weekend. You get so tired, you get so burnt out, you drain so much mental equity. And it's just like the farther along I get in my trading career, the less trading I actually want to do. And that doesn't mean that I want to quit trading or I want to do something else. It just means I want to take less trades now. I want to kind of watch the price action and I want to take that 1 or 2 good moves and call it a day. That to me is stress-free. That to me is freedom of time. That to me is progression. That to me is low stress. I hope you guys enjoy this video. Guys, I only have 5 spots left for the 24-hour all access to gold members, and then the price is going back up. So it's just going to be after the 5 people join, that will no longer be a thing, and it'll be back at normal pricing again, and it might probably just be back to the fixed lifetime price, and that price is also increased too. So if you guys do want a good deal and you guys think that maybe you can benefit from trading in a room with myself and the rest of the community, definitely hop on board, and I'll see all of you guys on the inside.